From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for May the 4th, 2016. Today we're going to be taking a look at the GBPUSD, the Great British Pound, versus the US dollar for today's trade analysis. It's important to note here for this currency pair at least that over the past couple of days, yesterday's manufacturing PMI on Tuesday, May 3rd, and earlier today at 4:30 a.m. Eastern US time, construction PMI, both of those pieces of data came out negative for the UK, came out lower than the expected number. That's bad news for the British pound. So we would expect with that negative news we've had over the past couple of days coming out of the UK that would be a bearish move for the GBPUSD. So as we can see, it has been bearish. Yesterday was quite bearish. Today we see the continued breakdown of what was a support zone now becoming a resistance zone, and we're looking for the continuation lower and some targets down to the next areas of support. The long-term trend, as we view it here on the daily time frame, has been down. You can see the red trend line. We challenged above that over the past week or so. Got a little bit of a challenge above the red trend line, but now testing and challenging back underneath it with that poor data that we've seen out of the UK over the past couple of days. If that holds, we will likely look for the continuation lower. If the bearish movement holds, we'll likely look for the continuation lower back down towards the 4,400 level as our next barrier of support. Let's go ahead and zoom it in now that we've seen all of that. And again, we've seen that congestion zone. It's been bouncing around between the orange and the pink zone inside the black box for the past week or so. We challenged a little bit higher, but then all of a sudden we get all that negative data and it starts pressuring this back down. We're now pushing back underneath the orange shaded area, which was support, which now will become resistance. It is interesting now that we're touching back down into the 100 period simple moving average. If it can break underneath that 100 period simple moving average, then I think that gives way for continuation lower, especially given the fact that we've had such negative data out of the UK over the past couple of days. So that's the direction we're going to continue focusing on. I think we're starting to see evidence and clues that could point to reversal here for this currency pair, and that's the direction we're going to start working in for the current time being. Instead of buying, we don't want to buy against this pressure. We want to look for selling in the same direction as the current pressure. Let's go ahead and take it on down to the 4-hour time frame. And as we get down here to the 4-hour time frame, we can of course see all that black box and all that bearish pressure we've seen over the past few days. Past several hours since yesterday, settled out here into the orange shaded area. Made that initial fall, settled out as congestion inside of here, and now we are broken underneath there. It's likely now that we're looking for sells on rallies into resistance with that breakout underneath that support. Now, of course, I would prefer to have an open and close. I usually will look for an open and close below a support level before taking into a sell, but I think today warrants, with the negative data that we've seen, the bearish momentum that we've seen building here for this currency pair, I think it warrants just on the open underneath. I went ahead and put a pending sell or order earlier today underneath that orange shaded area at 1.4510, and it's already gone back up and taken me into that trade just underneath our orange shaded area. So I am selling underneath this resistance zone. 45.15 to 55 is the resistance zone. I'm selling underneath there. Of course, if you wanted to try and wait to see if it'll bump all the way to 45.20 or 30, that would of course give you lower risk, but at least at this point it's already come off of the 45.15 level with a move back down into the 4,500 level. So definitely watching for that. If it can stay underneath 45, of course our target for this currency pair is back down here towards the blue shaded area into the 4,400 level. So that would be a nice 100 pip trade if it continues to pressure back down towards that blue shaded area. Our risk here, of course, is the break back above the orange shaded area. Your stop loss should be above the orange shaded area, somewhere up here, getting us our risk about 60 pips on the trade currently. If it breaks above that orange zone, we probably don't want to stay in this currency pair very long because it could be returning to the uptrend and heading back up to the pink zone. So all in all, to kind of boil all that down, with the bearish momentum, the poor data we've seen, the negative data we've seen out of the UK over the past 2 days, and the move lower, the break underneath the support zone, we're looking to sell rallies into this resistance zone, the orange shaded area. I'm already in it at 45.10. But any test there, 45.10 or 15, could be an opportunity for you to jump into this and target back down to 4,400 at the current time for the GBPUSD.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.